All right, let's get to the sector spotlight of the day. It's going to be post-earning trade. We got to start off with Apple. I know you've been trading it, up almost 5% before the open here. I mean, killer quarter. I have no other way to describe it. Usually it does the, buy the rumor, sell the news, even if they beat, and it's up 5%. I mean, that's how big that beat was. What are you doing today?
Well, what's important is, besides what I'm doing today, it's what the investors have been doing over the course of the past month. And we've talked about Apple. It's been one of the stocks that if you're an investor in the market, I've been saying you must own. There was a little pressure on it, but then we had that technical reversal a few days back through that 326 is where the traders got involved. I do know historically that it does fade on the open, so if you look at the chart here, I'm going to show you some resistance that traders are going to be looking at. Here was that reversal that we spoke about. This is when a lot of my traders got in this stock at 326. A lot of them did sell into strength yesterday because they don't take it into earnings. But investors, if you're in it, stay in it. What we're going to be looking at is this 360 to 364 area, which is the old highs. I'm not sure if it's going to be able to power through those highs today, but it'll be on the lookout. And I do think that Apple can get to 420, 450 this year, even higher. So even if you're an investor and they sell the open a bit on it, hold that Apple, and I'll tell you when you could add more. Hopefully you have a decent size already.
As I was going to say, when would you, I know you're flat right now on Apple, so when would you be looking to add?
If we get to 360 and hold, I'll get in there.
Okay.
I was trading it after hours. For right now, for us, it's a little tricky because short-term movements kind of throw us off a little bit and they're hard to handle. But for now, it's the first time I'm flat because my rule is I don't take stocks into earnings. I wait and I trade them after. If it holds up also the first 60 minutes, which is that 60-minute rule, then I'll buy it because typically if a stock holds the gap in the first 60 minutes, it stays in the direction of that gap as we move forward.
All right, let's go to GE. Had a beat on the top and bottom line, increased their dividend, up 4%. What kind of rule is it for this stock? Same 60-minute rule?
Sort of for this stock.
Okay.
It's a lot slower. It's not as volatile. I just think this is good for the public because a lot of people own GE in their 401k, their IRAs. I think a lot of problems around it with the whole Japan crisis about their nuclear reactors. So people
they'll be responsible for any payouts due to the nuclear crisis in TEPCO.
So I think this could put some cold water on those fears.
Okay.
I do think GE is okay. I'm personally not going to trade it, but I'd like to see this at some point get above highs. I think GE's report is overall good for the market. People who are in there, just stay in there. People who want to add to it, I would just wait a little bit.
Let's go to Morgan Stanley. Beat earnings. Revenue was a bit light, though. Stock up almost 4%. We're getting it's like the same news with every stock I'm saying. So what about Morgan Stanley?
These banks are just tough. The banks are very oversold. Ever since JP Morgan came out a week ago and they just beat up the group, beat up the sector, I've been trying to make excuses why to buy it and invest in this group because usually that's what investors want to do for the long term, but they're just slowly bleeding down. Morgan Stanley, let's see if today is different for a trade. If Morgan Stanley can hold its gap, which JP Morgan couldn't do, Citigroup couldn't do, Bank of America couldn't do. I think if it holds it, it's actually down now. So if it's not holding it already, then we know it's in trouble. Watch to see Morgan. I'm not going to focus on these banks. Just kick them to the curb for now, and we'll look at them at another time.
All right, and then we have to hit. I have it up actually at 3%, but we'll have to see what it actually opens. It's volatile. Let's put it that way. Okay, so let's wrap it up with Chipotle. Had a messy quarter. We're going to talk about that in just a few seconds. But first, you've been trading the stock. Also, do you have a trade for today when we are opening down?
I think some of my traders are actually going to try and short Chipotle. They don't think the quarter was enough, and there's also some negative headlines around it. If you take a look at the chart right here, CMG, it's had a great run. If you take actually a macro look and see where it came from, it's just had an unbelievable move. So out here, it's one of those high beta stocks now, even though it's a restaurant stock that's priced for perfection. I'm not sure what to do with it right now, but I think you just avoid it for right now, and if you're cute and you're an active trader, some are going to try and short it, but I would watch this 280 level. That's what was hovering, or that's where the stock was playing around with after hours last night. But I think there's a lot more to this quarter, so let's just take it to Alex, who will tell us